ready to go? Can I get a thumbs up? Is everybody here with us? Um, Tabi Singh, again, welcome to you. See
Yes, I'm
the
here. Thank you.
awesome. Tobile, maybe dropped off. There's what you call is coming back now. There's Butler coming back. Hey, Butler, welcome back again. Linda, Tanya, Olivia. I assume that you guys are there. So, yeah, this question is gonna be a little bit different to how we kind of went through the first question, all right? Because the first question we really were going into we were expanding on the detail, we were expanding on the calculations, we were expanding on, the thought process and all of those kind of things, all right? And really going quite wide with it. This question, all right, again, it's a very similar question. So I'm not going to get into the details of the calculations, but what we're going to try and just do here is get to the exam technique in this question that I have here now. Let me share my screen. You can see the question that I'm doing. Yeah, is the exam technique here that we want to actually just highlight, especially now after we've done what we've done. Because if you think about this question, here's a risk question, here's a WAC question, here's an NPV question, here's a qualitative factors question again, and here's possible benefits and downfalls of franchising. All right. So we don't want to necessarily get into a whole lot of detail around this, except to say, okay, let's get into the required. Let me just I need to increase. There we go. Let's get into the required and then just understand what is the required expecting of me, all right, and what should I possibly expect in the scenario to help me support my answer. All right. So let's jump into question A. Explain, guys. Again, can you see what they've done in the question? They've highlighted the keywords. All right. They've highlighted this. So they basically saying, and remember what I said earlier, look out for bold, look out for italics. Look, see here the italics here below. All right. See here the italics. Look out for bold, look out for italics, look out for squares, look for bullet points, look for call outs. All right, because it's really those call outs that the examiner is saying to you, check this out, make sure about this, all right? And generally we completely overlook it as guidance to how we want to respond to the question. Here in bold it is explained. What do you need to explain? You need to explain the risks. So immediately, all right, if I look at this question, explain the risks, all right, by Jonah in the context of that and the individual and propose. So can you see here, all right, it says risks identified. Then the second column is explain. Then the third column is propose. So this is identifying the risk. This is the impact of the risk. And then this is the response to the risk. Remember we did this yesterday? All right. So can you see here, all right, and then they say explain the risk, the key risk identified by Jonah. All right. So already they're telling you the risk is already identified. All right. So if the risk is already identified, I'm not going to give you a mark for the risk that's already identified. All right. I'll give you a mark for the impact and the explanation and the response. That's what I'll give you a mark for, which means if I'm giving you one mark there and one mark there, all right, then I need to get four. Remember, I'm surmising on this now, all right? I'm expecting that there will be four risks that I need to explain, and therefore four responses that I need to explain. If there are not four risks here, and that I need to identify, and let's say it's two, then one of two things. I'm assuming these are big risks, and therefore I must explain a little bit more for each. Alternatively, they're just doubling on the marks. see what I've done there is I've now established a framework for myself to answer the question number one. Number two, I know what to expect when I go into the scenario, because the scenario I'm expecting them to show me where this risk have been identified by Jono for the 2020 year. So if I go now to the scenario, all right, and I'm going up to the scenario, and they say, okay, run it. Then they give the background. Given all, they give the capital structure in the information. Then they give the notes to that, right? Given the overdraft, then they say there's a new investment opportunity. They give you investment opportunities. Then they speak about risk management. I'm expecting this is where the information will be. And then Jono considers risk management as a key focus area. The risks identified by him are listed here below. Can you see that? All right. So now I know these three risks are exactly what I need there. So I need to explain these risks. And there's probably some information for some of these risks, because if I just get one mark there for the explanation and there for the explanation, and I get another mark for the response, there's probably one of these risks that where I can possibly get 2 marks as an example and 2 marks for my responses to get my 8 marks. Are we together? All right. So let's possibly, since we are here, like I said, it's not, the idea is not to get into the answers, but let's, for instance, let's go look at the solution. Kashmika, you've got your hand up. Okay, so it was just a reaction. All right. So here's the solution. Can you see what they did here? Here's the risk ID 123. All right. Here is the risk explanation. There is the response to the risk. All right. So then can you see what they've done here? All right. Remember, this is a suggested solution, so they're going to give you as much marks as possible. That's why they say they're maximum 9 marks. All right. So you could have written, all right, 2 year and 2 year, but the point I was trying to make is, can you see there was 1 mark allocated to the explanation, and there was 1 mark allocated to the response to that. All right. Um, And can you see that for each of these risks that were identified, you could have actually gotten 4 marks for each of those, basically. But they were limiting this mark for this, because you may not have identified all the explanation or given the full explanation, or maybe identified or given the full or given a response to every single risk. Are we comfortable with the whole concept of explaining the risk like we did yesterday and then giving a response to that risk? They said he's typing. Good from my side, the city says. Okay, cool. All right. Let's move on from there then. All right. So to continue now, calculate the weighted average cost of capital again, coming back to what we said earlier. All right, here's now a 6 mark allocation to this. I'm not expecting highly complicated things here. All right, really the table that we did earlier is really what you're going to use, and the table would be basically what is my capital, what is the weighting, what is the cost, and what is the WACC. That's really what will be done, right? Then there might have been an extra mark for maybe if it's an after-tax cost, and maybe there's maybe a small calculation for the cost of something else, or even the cost of the debt. I mean the the capital structure, that you use the correct one, whether it's market or whatever it might be. In this case, they just said calculated the weighted average overall. Can you see what they did here? Also, they highlighted raw. This kind of suggests to me that there might be information for different companies given. Be aware that you're making use of the right information, all right, to be able to calculate this WACC. So if I go into this, into the details here, all right, here it is, and there's the capital structure and financial information. Here's the financial position, all right. There's your share capital, there's your retained earnings, there's your non-distributable reserve. Can you see there was the catch? Don't forget to include your non-distributable reserve in your equity. All right. Then you've got long-term borrowings, you've got overdraft, you've got trade creditors, current tax payable. Coming back to our question, our discussion yesterday, Gideon, would you include overdraft as part of your long-term borrowings or your loans for calculating your your WACC here? Let me ask you. Gideon is at rugby.
Sorry, my mic was muted. Do we know if they were historically in overdraft?
Well, you look at that information and you tell me.
Can we maybe scroll down to number 4?
Number 4. In this forum, no right or wrong answer. What's your first?
I don't think so.
You don't think so, Olivia? What do you say? Tonello, you unmuted. What do you say?
I wouldn't include it. Reason being, like you said yesterday, that you would probably only include overdraft facility if it's for like long term, but them using it to fund operational requirements, I don't know, but yeah.
Well, that's fine. Tanya, what do you say?
I would say no. There will always be a balance for operational, so it's like a creditor, a short-term creditor maybe, and they the 20 million. It's quite a large amount. Is it millions up? So they used
so
16 million.
Yeah.
Yeah, and so it's not declining. It's actually going up. So maybe they start using it to fund more than operational things.
Yeah, remember what we said yesterday, it becomes hardcore. It's not a positive swing. It's not, I mean, you didn't have a positive credit balance that would have formed part of assets, right? They don't even have assets on here, all right? It would have been formed part of assets. So you have a negative in 2019, which is a debit, a credit balance, sorry, a credit. When I say credit, I'm talking about a negative balance in your bank, which is an overdraft. And then here, like you just correctly highlighted, is increasing again. I would also match this and say, man, this overdraft facility, which is short-term borrowings, all right, is then significantly higher than my long-term borrowings. So how is my long-term borrowings at this amount, but my short-term borrowings is in this amount? And like we said, remember, it is, again, it's like substance over form, all right? So it's maybe hidden in the overdraft facility, all right? But, and yes, because it's a short-term financing option, because it's payable on demand, but that doesn't mean that is actually what it is, all right? Again, it's really the thought process of doing this, and maybe here now is what I was saying to you. So they give you, we'll get to the what you call it now, they give you a note on this, they give you a note on the share capital, all right, and they say the non-distributable, I mean the shareholding is that, which is Jono and Fusaki, etc. They say the non-distributable reserve consists of the revaluation reserve, and this is the properties occupied by Roll have been revaluated to current market value. So there's also a question: do I include this or not? All right, should I or should I not? All right, there's retained earnings, and I've got share capital only of what is this? 1,000. All right. So I'm going to jump straight to the solution, and so that we can amplify this and see, where's our thought processes and why is our thought processes what it is. All right. And essentially, what they've done here is they have said calculate the weighted average cost of capital overall. And what they've done is they use debt and equity. The cost of debt is 16%, and that would have gotten, and then they calculate the cost of equity using the risk-free rate. Is this correct? Yeah, that's right. All right. And they didn't even look at that. And so here's my question: why did they not even look at that? Right. And if I go further in this, 35%, 25. All right. I don't know why they use that. I would not agree with that solution. I would have done it the way, because there's not even information given here that tells you about the debt equity ratio or the targeted equity ratio or anything like that. So I would have not done that. I would have, for instance, in this case, I would have not included the non-distributable reserve, all right, because it's specifically linked to
David,
this.
hello.
Yes, there
Yeah.
If
is.
you got your additional information,
Hmm.
the second
Oh,
line
sorry,
from the
sorry.
bottom,
Yes.
Oh, I didn't go further down. Sorry. All right.
it says
There we
Roll
go.
has a target debt to equity ratio of 70%.
All right. So, and then they say calculate the weighted average capital. Again, here, let's talk about that. And would you have used the 70% or you would have used the information above?
70%. I would have used the 70% considering how many marks was allocated for the work. It's 6 marks
Besides the mark allocation, why would you have also used the 70%? Let's think about that.
because
Whether it's right or wrong, as opposed to the mark allocation.
I'm more comfortable with the debt to equity ratio.
Yeah, but somebody might be uncomfortable with it. All right. Remember, it's going to come back to that very principle that we spoke about the other day, yesterday, and even earlier. You're always looking at the risk into the future. All right, so you're calculating the WACC based on future, and this is what they are striving to achieve, which is the target is to be that. So what it is right now is a historical. All right, you really want to work towards what they want it to be, and what will the working weighted average cost of capital be? What will it be? All right, so that's what you apply to be able to determine your risk associated with the project, with the entity, etc. I missed this information. I did go down here, but I didn't see this. And then, of course, they give you all this information here, which would have helped you calculate the cost of equity. All right, we spoke about this enough yesterday. There's your average risk premium is 5%. This is a risk premium, so this is plus the risk-free rate. So 9.2 plus that gives you your market rate. We kind of spoke to that yesterday. All right, then there's your beta, all right, which would be then, this is the multiplication effect, multiplicative effect on that. All right, so it will be 9.2 plus that, plus your risk factor. Yeah, right. So if I go to the solution again, this is exactly what they did. There's that, all right? This is the 5% times the beta, all right, plus your risk-free rate to give you that. And then they've used the 70-30. Remember, remember we spoke about this debt equity yesterday, how to get to the 170, all right? And that gives you that's the cost that you calculated. Don't forget, this is after tax, all right? And that gives you use then your weighting times the cost to get to that, and that will be in your 6 marks. Easy peasy. Right. Here's the next question here. Is advise. Again, Lesedi, there you will never forget this because I'm always going to link your name to this. Advise, which means you must conclude and you must tell them at the end of this whether they should invest in this or not. Right? It's a conclusion, and when you make a conclusion, remember support your conclusion. Say yes, they should invest in this because the net present value is positive, and and you can even go for, you can either say the net present value is positive, or you can say the cash flows, all right, exceed the expected return because it is the net present value is positive. That's what you need to do here. I go the same route where I said earlier, all right, where you do it over 2 pages. You know you're expecting to get either a table or a list of things. You're writing down year 0, year 1, year 2, etc. You want to get to the cash flows as quickly as possible. All right, thumbs up if you're running out of time. All right, so that you can calculate your net present value. Don't forget you need to use the correct discount factor, and here you need to find out, all right, are they giving me some kind of discount factor, all right? In the additional information, they are giving something here. Inflation for cash flow items for the next 3 years and beyond are estimated at 5%. So they're basically telling you increase by 5% for on every line item. That is for the cash flow items that are inflation linked, where you don't have other information being provided to you. All right. They give you some additional information here that they have a 1-year lag for tax payments. So basically, your cash flows for the tax payment will be in the next year. So year 1 will cash flow for tax payments will be in year 2. Year 0 will be in year 1. Year 2 will be in year 3. That's very important because you'll get marked down if you don't place it into the right column. All right. Again, here they've given you this breakdown again. They're saying 3 years. All right. So you're expecting your net present value to be 3 years. They're saying there's the revenue per shirt with a 10% increase. So can you see this 10% increase is what you will use and not this 5% because that's not relevant to this. Then they give the number of shirts anticipated to be to be sold in the first year is as follows. All right. So if this is what they give, then basically you'll just calculate 50% of that plus 30% of that plus 20% of that. That will give you the number of shirts anticipated to be sold in the first year. All right. Then after that, all right, there'll be they're saying sales volumes are expected to increase by 8% after that. So you can apply 8% to each of the to the probability that you calculated year for year 1 to year 2 and then on to year 3. They tell you the working capital at the beginning of the project. All right, then they need to, and the related branding total cost of fittings. There's a 2 million outlay. There's your recoupment at the end, 400,000. All right, and then there is your wear and tear allowance on that. They can no longer sell as part of the trademark deal, they can no longer sell their own t-shirt. The total contribution earned, you see there's the loss of this contribution, all right? And then you can work this as the opportunity cost as a result of this, which because it's relevant to this calculation, relevant to this investment, and that's essentially what you'll do. And if you look at the allocated marks, 15 marks for that, all right? This layout would have probably also been linked to the net present value calculation. And so if I go back to the solution, Can you see here, communication skills, presentation, and layout, that one mark is given here, and really this is based on this. Can you see there's the trademark, there's the fittings, there's the sale of the fittings, which is that recoupment. Here's your working capital, all right? There's the recovery of the working capital, all right? Again, I would have put it in the same line. There's your contribution calculation, all right, which is sales less cost of sales, or sales less variable expenses. That's really what that is, all right. Then here's the opportunity cost. Remember, I said that was the opportunity cost. They said 400, and then they're increasing it by 5%. There's your tax calculation to be able to calculate what your cash flows are, all right. You're using 15.75% as your WACC. And if I look at that, they would have probably told you in the question, we didn't look at that. In the question, they would have told you, did I miss that 15.75% somewhere? Did anybody see it? Oh, no, there we go. They've used the WACC. All right, so remember earlier when, in this case, it wasn't given. Remember, we spoke about that Swanello earlier. So they used the WACC that we calculated here, and they used that here to be able to calculate here. Then can you see here? Here's your conclusion. Accept the project because it's expected to generate a positive NPV. You didn't even have to elaborate like I said earlier. Then question C2, discuss the qualitative factors. Again, they're speaking about the qualitative factors, all right, which means they don't want to know about the financial side of things. They don't want to know about the quantitative things. They only want to know the qualitative factors that Rawls should consider before purchasing the trademark, all right. We didn't go into the scenario, but some of the things that I just picked up here now, all right, that as part of buying the trademark, they can't continue selling their own thing, all right. You kind of need to expect what will happen to your existing customers, all right. Again, you can get to some kind of framework to help you, all right, and say, will political be impacted? No. Will environmental, will what's the S? Political, environmental, social, technological, legal. All right. You can look at the strengths, weakness, opportunities, and threats. All right. You can look at the balance scorecard. So if you keep just all of those frameworks in mind, so that when you get to the into the scenario, then you find out what's the scenario telling me about this, all right, as opposed to where I am, all right. We have an existing business that is going for 15 years. A company is highly reliant on the skills and experience, and now suddenly you're going to purchase something where you don't have the skills and experience, all right. They have a recognized brand, all right, and so you're giving up your brand for something else, all right. What if people don't take up the brand, the new brand, like they took up your product, all right? You already have an existing distribution, all right, through 9 provinces, and you got 9 stores, all right. And so what's the impact for that? That's really the thought process that you're asking yourself around that, so that it can help you, guide you to answer the question. And so if I go to the scenario, I mean, not the scenario, the qualitative factors, all right. Yeah, they ask what will happen. Again, guys, I want to highlight. Can you see all the questions being asked here? Questions. All right. There's another question. There's another question. All right. Here's another question. There's another question. All right. So basically, you're really just asking yourself, what if this, what if that? What will happen after 3 years when the right of use expires? All right. Can you imagine if you give up your business right now and you've got only 3 years? All right, I'll take your question now, Lesedi. If you've got only 3 years to for this trademark and then they don't renew it, what then? Lesedi?
So when I was like just going through or attempting this question earlier, right? Obviously it was before you had, given us the insight that you can ask the questions. My question now is, I had these questions, but then I had felt like I needed to answer them, right? So now, since it doesn't say evaluate, it says discuss. It does not necessarily mean that we need to have the answers. We can still just ask the questions regardless, right? And then we'll get our marks.
Remember, in the context of this, your question is the discuss.
Okay. Okay.
Does that make sense?
Okay. Yes,
All
it does.
right. So, because remember, this whole thing is about, your questions is the discussion. It's like me having a discussion with you and I ask you a question. I don't have the answer, but I'm asking you the question. Right. So the discussion part doesn't mean that you must answer this question. It's really your thought process around evaluating and considering this decision that you need to make. Right? How is this different to the not how you're asking yourself, right? What's the impact on this current strategy? This current strategy is X, Y, and Z. It's considering to franchise. How is this gonna be? How is it gonna impact on its consideration from a strategic point of view to franchise the current model? And then you're right. What's the impact on that? That's what you'll ask. Right? So you're just asking yourself all these questions, and hence I'm saying, I want you to understand this technique, right? You're really going to not waste your time. You're going to jump into it, and you're going to be confident that you're going to get the mark. Because I'm sure many of us, I'm including myself there, would know we ask the question and we answer the question because we're thinking that the mark comes from answering the question that we are asking. Am I right there, Lesedi?
Yes, I'm happy with that.
And can you understand then why you would then be wasting time, all right? Because that's not what's expected of you. And you would not have gotten a mark for the explanation or the answering of that question. That would have been all 1 mark. And the 1 mark actually was lying in the question. Go listen.
No, I think I'm happy. I'm happy. I was in agreement with what you were saying. Okay.
Awesome. Okay, so then question D, all right? Question D. Question D. Question D says, advise again of this 4 marks. One must be a conclusion. All right, which means you have to give possible benefits and downfalls of franchising, which is only 3 marks. Guys, all right, this kind of question, there's no information given here of the benefits and the downfalls of franchising. The question is really expecting you to draw on your own knowledge, general knowledge of this, all right? Because in this question, there's no information given on they just say here, all right, that they're considering franchising ROL. There is no other information about the franchising here that tells you, how they're going to go about the franchising and all of those kind of things. But just think for yourself. All of us know KFC. All of us know McDonald's. All of us know Chicken Licken or Nando's or give me other one, something else other than food. Franchises, Spa, all right, retail franchises, Pick and Pay, Apple Store, Vodacom. All right, you've got all of these outlets for Vodacom, for Cell C, all of these franchises. All right, so you tell me, all right, what do you think a possible downfall or possible? What's the question say? Let me just go back to the question. All right, possible benefit and a downfall of franchising is. Let's talk about it quickly. Linda?
A benefit that I can think of is already having the reputation of the franchisor. Like you're already going into it with a trusted brand that people already trust that will bring business to you.
So the way you answered your question here now, just be careful not to become too expansive. Right in a short bullet point. The first part of your answer was already correct. You didn't have to
Okay.
substantiate it. All right. So basically, you said the benefit of going in a franchise, all right, is because you have a trusted brand.
Okay.
All right. What is would be a downfall, Linda? Since you're
I
talking,
mean, I don't know if you know about the recent Apple Store's
tell
saga.
me.
So they basically have not been providing the services that they promised to provide. So a downfall can be in the same sense that you won't be able to keep up with the reputation of the franchisor and not be able to provide the same standard and quality of services and products. Well, products come, but services per se that the brand is known for.
Yeah. So can you already now see what you did there? You drew on your own knowledge and the general knowledge of this, right? So all you needed to do is just bring it into context with you. So you can't mention Apple, you can't mention specifics. You have to say generalize in terms of franchising with regard to that. You can
Yeah.
another benefit could be that they already have a proven system. All right. There we go. Tanya is saying it's costly or expensive to franchise. All right. The other thing is you might be bound to certain rules and regulations. All right, which would become expensive. All right, like Tanya said, and also there's normally a franchise fee there that you'll be have to pay. All right, to them on a monthly basis. They want a percentage of your revenue. All right. All of these things. It's all things that we know. So if I now go back to the um, to the solution. Can you see? Mr. Nkomo can expand at ROL at the expense of the franchisees. All right, franchisees are likely to commit it due to the investment they put in. So in this case, what they're doing is saying the franchising is when I franchise my stores, what is it? So that was the context that we may have missed here now. All right. So in other words, when I'm franchising my own stores, what are the what is the so you just have to maybe just change the perspective of that. All right. Successful locations can return good revenue to you. The out of value can be generated franchise contributing to advertising the economies of scale. The franchises may have different visions or goals than the ROL. One band friend can ruin reputation. Lots of legal regulation and administration involving high cost relating to franchising. So essentially, what we were saying here is, all right, the catch here was number one, you needed to speak to it from Jonah's perspective, advise Jonah regarding the possible of because they are wanting to franchise. So not that you are investing in a franchise, you becoming the franchisor. So that was the first thing that you needed to do. And but you can already see here, all right, that you needed there was what's the 2, 4, 6, 8, 9 marks here, all right, in terms of possible, but you would have had only a maximum of 4. You just needed 2, then 2, and then you needed to conclude. All right, they didn't give a conclusion here, but you needed to conclude, and you would have concluded to say you had advised that be you should invest or don't invest in the franchise. Tanya's giving me a thumbs up without asking, so that's great. Thank you very much for that, Tanya. Bongani, you've got a question? Oh, is that a reaction? All right, that's great. The set is great. Ntabe Singh, you haven't spoken. You joined late. How's the session been so far? I know you might have just had difficulty to just catch on. What do you think so far?
Yeah, I'm just trying to find my feet, but I think I'm following. Thank you.
Right. Which institution are you from in Tabasing?
Melpak.
Oh, you're from Molpa. Okay, fine. So we've still got time to I think you're right on the 28th.
Yes.
if I'm not mistaken. All right, awesome. Cool. Are we good? Cool. Let's get into the next question. Right. Yes. No. You just say no. All right. I shared that with you, so I can close that. Okay. Again, you haven't covered valuations, have you?
No,
Olivia?
no.
No, you have not. All right. Tanya, no, you have not. So I specifically chose this question, all right, because you don't have base knowledge. Any base knowledge that you might have might be from undergrad, if any, all right. But what we really wanted to focus your attention here is, all right, how certain questions are put and what these questions mean and how you can use something that you don't have any knowledge of. Even if you can't really answer the question right, out of 20 marks you might get 5 marks or something like that, but you really want to just understand what is this question asking me, and is there any base knowledge that I can use, that I can capitalize on to attempt something. All right. If I find myself in a situation where I ignored something, or I forgot about it, I don't know about it, or I never understood it, or I missed the classes, or I didn't do the content, or whatever it might be. And that's really why I asked this question. I wanted to show you this question. All right. And you can see even with the question, when I shared it with you, I didn't share with you the scenario. I only say, oh, well, you got the whole scenario question, because that was what we did this Arctic Cool yesterday. So you do have it, but the intention really was not to go into the scenario here. It was really to show what is this got to do. And for those of you going into valuation in the next week, maybe two, this would serve as a, oh, now I know. Okay, this makes sense. This is not as complicated. This is not as difficult. I can connect the dots. I know where I am and I know what to do. All right. So number one, they're saying regarding the determination of an appropriate acquisition value for FWH. All right. So let's talk about acquisition. All right. You did groups. All of you did groups. You did the purchase or the investing either significant influence as an associate or a subsidiary. Or when you are buying, what are you buying? When you are acquiring a company, what are you purchasing? I'm listening. You're purchasing the shares, goodwill. Well, goodwill is the excess that you are paying for, all right? But yeah, you're acquiring that, all right? But if I take you back to some accounting principles, all right? The accounting principle says assets equals assets equals owner's equity plus liabilities. All right. So there we go, Olivia. Net asset value. So basically, assets minus liabilities, because I'm now bringing the liabilities from the other side of the equation, equals owner's equity. So when I look at this, all right, NA, net assets, equals owner's equity. And so both of you, Gideon as well as Olivia, you say when I'm buying the company, I'm buying the net assets. That's what you said, Olivia. Gideon says you're buying the shares, which is the owner's equity. But both of you are right, because the one is equal to the other. All right. So when you are acquiring something, all right? You are acquiring the net assets or you're acquiring the owner's equity. And essentially what you need to do for this is you need to place a value on this. So the value is 10 million Rand, all right? And if that value is 10 million Rand, then my owner's equity is also 10 million Rand, all right? Because the left-hand side must equal the right-hand side. So essentially what you're saying then is that based on the scenario, all right, what the information that the scenario will give me, the scenario will give me one or the other. So I am acquiring the net assets or I'm acquiring the owner's equity, whichever, which means I need to value this net assets. All right. So it's either looking at the market value, looking at all of those kinds of things, or I must look at the value of the owner's equity and the owner's equity, what is in the owner's equity, my distributable reserves, my market-to-market reserve, my shareholding, all of those things is what I must value. Once I'm valuing this, all right, that's when I can now say, oh, this is what it's worth, all right, and then I hold it there for a moment. I now know what it's worth. All right, so this was explaining this first part where we're saying regarding the determination of an appropriate acquisition value for that. All right, so this was the basis that I just wanted to explain there. Now they say calculate FWH's weighted average capital. Guys, especially for when you are doing questions like this, all right, please do keep in mind, all right, that you might have multiple entities. Gideon, you're saying 6 marks? Okay, fine. 6 marks for the weighted average cap. Okay, but exactly. All right, you're looking for the simplicity because it's 6 marks. You're looking for quick. How can I do this quickly? But here's the catch. All right, in this kind of questions, all right, this question was relating to Arctic Cool. So be careful. They can give you Arctic Cool information and they can give you FWH's information. FWH is this appropriate investment that they're wanting to make for FWH. So it's a new entity. All right. So don't use the wrong entity's target debt equity ratio or balance sheet or whatever to be able to do this. Make sure you use the right entity's information to do this. Otherwise, that 6 marks will become 2 marks. Not because you didn't know, but because you just made an assumption. All right, so that's what I wanted to bring there. Now they say using a free cash flow valuation approach. Guys, right? There is no difference. No, let me not say no difference. All right. This cash flow here, all right, essentially is exactly what we would have done with a net present value calculation, save for one or two techniques that is relevant to a free cash flow valuation. All right. But in essence, it's not different to a net present value calculation. You're going to have the description. You're going to have year 0. You're going to have 1, 2, 3, year 1, 2, 3, 4, whatever it might be. You're going to have your cash flows to be able to calculate the present value. And that's really what you're going to have to create a value for your entity. All right. All you're going to do when you get into the valuation now model, valuation topic, all right, there's going to be specific techniques, specific nuances, that's what I'm looking for, that's going to be applied to a free cash flow valuation to be able to do this. Guys, if you understand the basis for that, all right, if you understand net present value like we did it earlier and all those kinds of things, then this is a walk in the park. Can I show you the solution to this while I'm there? I did share the solution with you, but let me do that. Okay, so there's your WACC calculation. All right. Your WACC calculation, pretty simple. All right. Cost of equity, they use the risk-free details and all of those. Debt is after tax. There's the weighting. All right. There was some unleavering that needed to be done. All right. In this question, and they would have gotten. All right. See ya. The operating profit, you're adding back depreciation because it's not a cash flow item. All right. Add other income. Then you have profit before tax. You're adding finance costs. All of this is basically an income statement. Then you've got your tax. All right. There's your cash operating after tax. You've got some capex. You've got some working capital movements. You've got increased investment in operating cash. Then you get to this, which is a free cash flow from operations, right? Which is basically saying how much cash do I have left, basically. Again, it's all cash, all right? Free cash, all right? And then you have what they call a terminal value year, all right, that gets calculated. And this year becomes your cash flows for each financial year, 24, 25, 26, all right? You add back some investments, you less some debts. Now you're getting 100% of the equity. All right. This present value here is the discount that you'd have used here. All right. Using an appropriate discount rate, and that appropriate discount rate would have been the WACC that you calculated over here. All right. The principle that I'm trying to show you here is that this, you could have thumbs up this and you could have gotten still the marks, even if you didn't understand the details behind this. All right, to be able to get you to your answer. Leon, you've got a question.
Hi, David. Is it possible to go over the levering and unlevering again?
Yes, I can. Yes, I
Thank
can.
you.
All right. But while you're there, you've got a question. Will you still get more than 50 if you do exactly the same as the MPV calculation? I think most probably there's a high likelihood that you could. All right. There would, of course, be some marks here and there that you might lose, but generally speaking, I mean, all of this here on the top, all right, which will just be in the cash. This is your tax calculation that you would have done, all right? Yes, working capital, most of this you could have gotten, all right? Ultimately, what you want to do is that even though you might have gotten certain things wrong in here, all right, you would have gotten something right in there, all right? By just assuming what is this and using these cash flows to determine your net present value using the appropriate discount rate. All right, and then you add this is other investments, less debt, which would giving you the value of equity. In this case, the question was, okay, this is my value of equity, all right, because essentially I'm adding the investments and less my debt. If I go back to my question, if I go back to this year, it is assets minus liabilities. So everything less my liabilities is equal to my owner's equity. That was really the calculation here. All right. That gives me my equity, which is according to the accounting equation, total. And in this case, the question specifically said they wanted 55% of whatever you calculated. So even if you had calculated all of this wrong and you got this value of equity to say 55% of that amount, there would have been your answer. Is that, are we together?
Yes.
Okay. So, okay, fine. In this question, I'll come back to the actual question of the Hamada formula. In this question, it wasn't a case of the Hamada formula. Is that how you pronounce it? Sorry if my pronunciation is wrong. All right. In this question, it was a case of whether I use the 1.19 or do I use the 0.87. So if we go to the actual question, article, right? Here's the actual question. This was on FWH, remember? All right, so here's FWH, and basically they give you all the information, all right, and then let me just continue down, um, down. Yeah, then they give you additional information. Okay, yeah. Um, okay, yeah, oh, they actually gave you the Hamada formula. All right. So remember what we spoke about, and maybe um, we spoke about the risk. All right. So what they did here is, all right, you needed to use a beta. All right. And the beta would have been a risk factor appropriate to this company. All right. Are we together there? I just need your attention. I mean, I need your yeses as I go along. No, you don't have to know the formula. It will always be given to you. All right. So the beta is your risk associated with the entity. All right. Now, in this case, you would have had the formula, all right, which is your risk-free rate. You would have used you'd have had the market premium, all right. And now you don't know which beta to use. You've got a beta of 1.25 and you've got a beta of 1.08 that is given to you, which is a levered beta, all right? And they're giving it for JEC listed manufacturers like AC, and they're giving it to JEC listed like retailers like FWH, all right? Which one would you start with? FWH or AC? Whose beta are you calculating? I'm listening.
FWH.
You're calculating FWH, all right? So if you're calculating FWH's beta, all right, um, you want to calculate the risk of FWH, isn't it? Am I right?
Yes.
Why are we uncertain, you know? Talk to me.
We said yes in the chat.
Oh, sorry. I'm looking at my thing here. Let me just say. Okay. All right. So you're using FWH. All right. So basically, we're saying, oh, JC listed retailers like FWH. All right. So basically, you say, oh no, I'm going to use this beta of 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 the JEC listed that is closely or similar to the company that I'm trying to calculate the weighted average cost of capital for. All right. And so now what I need to do is they're saying that this beta that is given to me for this entity and for this one, all right, is levered. What does it mean when it is levered? No clue. I like that honesty, Ridwan. What that means is that this beta has factored in the risk for that company. And for me to use that, I must actually take the risk factor out of that company. And once I've taken the risk factor out of that company, then I must then bring my risk factor into it. Does that make sense? So what you're going to do here is, all right, you're going to basically substitute, and you're going to put this 1.08 as my levered beta. All right. And then you're going to say, you're going to put in the tax rate, you're going to put the debt equity ratio. You're asking a question here, but isn't that the point of beta? Why have it levered? You have it levered because it is specific to that entity's risk. So basically, they're saying this levered is not a general thing. It is that company. So you must remove that company's risk, right? So that you can bring it to your company's risk. All right. So when you substitute here, what you're going to do is put this 1.08 as your levered beta, because that's what this is. All right. The unlevered beta becomes your unknown, which means this whole part of the formula that is given here, divide by that and bring it across. Because now you can work out the unknown that becomes that gives you the answer to the question. Does that explain it? Tanya says got a thumbs up there. Gideon says I understand. All right. So really the complication here, if I can put it that way, is really just understanding which one to use and how to plug it into the formula to get to your answer. Please don't, the thing that I've made mistakes on this formula is the BODMAS. Remember BODMAS? I don't know if you called it BODMAS when you were in school. Brackets of division, multiplication, addition, and subtraction. All right, which means you can see here 1 minus and the brackets. Please complete this first. So this answer is going to give you, in this case, 0.73. Don't add this 1 to the 0.3. First multiply this 0.3 by this debt equity ratio. And this debt equity ratio would have given you as, this is debt equity, basically, which means it would have given you as 70% or 60% because it's debt over equity, all right? That's what this would have been. So 60% or 70%, I think the question would have given you debt equity ratio, that's a target of 50%. All right. So you could have just put in 50% there or 0.5. So you would have said 0.73 times 0.5, then plus 1. Then all of this in the bracket is under here, which means this divided by that to give you that answer. We're together. Awesome. So let's go to
sorry, David.
Yes.
Can you please repeat that about the BODMAS?
BODMAS basically is a mathematical approach.
Yes. No, I
Right,
know, but just how you should do it.
Okay, the order is brackets of, meaning multiplication. BOD is division. Of is multiplication. So but it's just of something of a ratio of division, multiplication, addition, then subtraction.
Sorry, David. I think there's a miscommunication. Just you said you must watch out for that one because if you follow the normal way, then you're gonna get it wrong.
Oh, okay. No, I was saying. Let me just bring up the thing again. Where is it now?
He said that he added the 1
yeah.
to the 0.73 instead of
Yeah.
first multiplying it out first and then adding the 1.
Oh, okay. Yes. Okay. No, I understand.
That was and sometimes you can just in exams you make those silly mistakes.
Yes. Okay. No, I just
in
wanted
exam
to make
I depreciated land.
Thank you.
Sorry. But that's what happens, yes.
All right. So that was really what I was trying to point out. Yeah, Linda. Exactly. All right. And so you I think all of us are competent, all of us are capable, all right? But we make these silly errors because we get under pressure in exams and we don't understand how we can how we make these mistakes unnecessary. So we're really here, a big part of the session is really building your confidence, all right, showing you that you've got what it takes, all right. You just need to remain calm. You got to build a framework. You got to understand the required. You got to unpack the required. You got to see what the trigger words are. Don't lose focus of the bold. Don't lose focus of the blocks, all right. The bullet points, the italics, the framework, the limitation in terms of the required, where they say only look at this, don't go any further. All right, look at the mark allocation. Try and split things out and see how you can break up the mark allocation to help you structure your answer. And that really is how you maximize your. Firstly, you maximize your marks. You have a good breadth, all right, instead of all the depths, like somebody said earlier, you write 2 pages and you only get 2 marks for that, all right. And then at the end, you also then, like we said, the consequential or incidental benefit through this is your is time management. All right. Let us go back here. Here, question 3, you would have you can only answer this question, all right, now that you've gone through, if you go through the content, all right, and the content basically, let me just get back here. I just want to, where's my, okay. Yeah, this answer to this question would have just been based on really about the theory of this, all right. That's really what this would have been, all right. And basically you basically weighing up a free cash flow valuation, all right, and why it's going to give you a more accurate valuation than this 460 million that FWH's management team did, all right. Now the question here would be, is it the comparison between free cash flow and 460 million rand, or actually is it the free cash flow between what they did and the method that they applied? So this scenario here, all right, tests your understanding of free cash flow and what that means and what you need to do and how it results in an answer, versus this what the management do. And if you go into the scenario, you've got the question for that. You'll find out that the management used a dividend growth model to come to this 460 million rand, all right, to be able to calculate this 460. And so really you're comparing a free cash flow valuation to a dividend growth model. All right. And essentially you are now saying, okay, what is the dividend growth model? What is the free cash flow valuation? This is really for 4 marks. So you really need to say a dividend growth model is this. This is the outcome of the dividend. This is the negative. This is the positive. For a free cash flow valuation, you say a free cash flow valuation is this. This is the positive or this is the negative. Therefore, the free cash flow valuation would most likely result in a more accurate valuation than the dividend growth model that management use. We're happy with that. Again, I'm not getting into the detail. I'm really just setting the scene, all right, for when you get into the valuation, so that it's not completely, you can actually see it's not actually complicated, it's not difficult. It's really building on the knowledge that you already have. Then G says, if AC decides now to acquire 55% of this, recommend with reasons whether it should fund this with debt and or equity. Again, we went through this question yesterday, all right? We said there's a debt versus equity, then there's a debt versus debt, all right? Then there's a debt versus debt plus equity. What would prompt some of the conversation that you'd have in this conversation? Based on what we spoke yesterday, what are some of the things that you'd consider? I'm not looking for an answer. I'm just looking for what you would consider in responding to a question like this. We're talking framework. We're talking thoughts that you would use to be able to guide you to answer the question. Let me help you with one. Carl. Next, Olivia.
So we're supposed to look at no man, you're putting me on the spot. What is more expensive or less expensive? And um so this is basically the financing decision. So we're looking at
What about your target capital structure? How is it going to impact your target capital structure?
oh yes, we
Isn't
must
it?
look at that because it is this one is this the question with that it is 70% or am I
Yeah.
just getting confused?
Yeah. Tanya says the repayment, the cash flow affordability, the tax deductibility, the tax benefit, the tax shield. Gideon,
Wouldn't you also mention the policy of the company and
the policy of the company, all right? You look at debt covenants, you look at collateral, you look at what the impact will be on your weighted average cost of capital, all right? You
the
look
risk of
at
losing control of the company from
there,
issuing
all
shares?
of those things. All right. So we gave a framework yesterday. I can't remember what it was, but basically it was control, it was risk, and it was cost. I said I didn't remember it, and then I remembered it as I was speaking to you. All right. So again, if you have the framework, which is control, risk, and cost, all right, you would have spoken about each of these three elements that we just mentioned for debt and the other one for equity, and come to a conclusion based on the targeted capital, based on those three and how it leads to your targeted capital structure. And if you look at the solution, if I bring, let me see, where's the solution? I've been losing the solution every time on my screens. Here's the solution. All right. This was the solution for this free cash flow valuation. And basically, they say the 460 million rand was determined using the dividend growth model. The free cash flow valuation does X, Y, and Z. I don't want to bore you with that. All right. And that's really the comparison that you needed to do to be able to get to an answer. All right. Recommendations, read the funding acquisition. All right. Here, AC currently does not make use of any long-term debt to fund its operations. If the acquisition is funded with debt, does it mean a change in the capital structure? There we go. AC should also consider its existing debt and equity financing to assess whether it needs to move more in line with the target. There we go. Debt financing is generally cheaper. There we go. Debt finance includes interest payments, which are there we go. All right. Cheaper source of finance. Returns paid to the shareholders are not tax deductible. There are no control implications when raising debt finance, but issuing additional ordinary shares will dilute the existing shareholders' control. Debt finance, however, is compulsory payments. Your expense that Tanya raised there in the chat. Let me just open the chat quickly. All right. Um, Increases financial risk because there's compulsory debt, interest, and capital payments. All right. Yeah, what if they do not earn positive returns? All right, etc. Then financing the acquisition by equity will have no financial risk and no compulsory payments. All right, dividends are not compulsory. When sufficient profit, then they can issue dividends. Shareholders, however, require compensation for the increased risk, so making equity finance more expensive than debt financing. Debt can also be used to increase the returns of shareholders. All right, there's a positive financial leverage if the return from acquiring is higher than the company's cost of debt. All right, debt is how we would like to require security. There is the collateral, the control, pledged assets or surety from shareholders, in addition to having loan covenants that equity funding would not have. However, a going concern is being acquired, which reduces the risk of this investment, and the associated loan will then likely require less security. Furthermore, the assets are acquired could also be used as security for the loan funding. Given the above factors, AC should predominantly, here's the conclusion, AC should predominantly utilize debt financing for the acquisition of that, as FWH is profitable with assets that could be used as security, and this seems to be a low risk investment that should immediately generate positive cash flows. And that's my story. Talk to me. Are we just absorbing?
It all looks so real. It all looks so very doable now. But I'm just, if I look, I'm from Malpark, so if I look at all my screens that's not ticked, I, and all the stuff that we spoke through, I have the knowledge of, but it's because I feel I must go through everything and then I don't get to do all the questions. And what I actually just need to do is go through the past papers and have the frameworks, like you said now, so that get exam. That's what I need to do. So, yeah, thank you very much.
Anybody else? We're trying to just consolidate based on our experience. Yeah, I just went into the dark now. What happened? Lights went off. Right? Yeah. Okay.
I just have a question.
Yeah, Ronella, go ahead.
Um, I'm not up to date with my work, right? And it is because I tend to want to go through the content or the theory first before
Mm,
having to attempt the questions. Hence, I get to fall behind.
mm.
So, from your perspective, would you advise, how would you advise me at this point leading on to test three?
So just confirm quickly, you are with Mopark, eh?
Yes, I am at Mill Park.
All right. So this is what I would. I mean, it's very difficult to advise you. So remember, whatever advice I give you, you must kind of filter it, all right, for your own specific circumstances. All right. I know that. Right. Ultimately, you're the one that's going to write the exam. You're the one that is responsible for the own outcome. All right. So you must be comfortable with whatever actions you take and therefore filter my advice. My view is always this, that in the last week, maybe in the last week and a half, depending on whether you're full-time student, whether you've got available time, whether you're working on all other, right? For me, because I'm working, I would say at least in the last week, maybe 10 days, let maybe say week, 7 days, if I take daily, 6 to 8 days, all right, I would stop content, right? And then my view is always this, right? 100% of the exam can never be 100% of the content, but 70% of the content that I cover can easily be 100% of the exam. Does that make sense?
Yes, yes.
And I've seen people fail that have got 100% of the content,
Mm,
but poor exam technique. And I've seen people pass with flying colors, including me, all right, that have got 60% or 70% of the content, but a very good grasp on exam technique. So I would, in the last 6 days, 7 days, all right, forget the content, all right, and rather than get into the technique, get into the questions, get into the integration, all right, that is needed in an exam situation. I would not even go to PQs in that last 6 days, 7 days. I would get to past papers of a test of a test or an exam. Well, in this case, it would be a test. All right, and I'll focus on all of those things to see the integration, to see the technique, to see the wording, much like what we've done. And the first one paper, I would workshop where I wouldn't do it under exam conditions.
mm,
I would actually workshop it and figure it out and understand how things are put together, why this, and then use that to kind of go back to the content and say, did I miss something? What does the content say about it, and things like that, and wrap up some of those knowledge, and then get to maybe doing practice past papers. All right, you need to, in my recommendation, especially for math, try your best to do at least 3 past papers for your test coming up. Because you would have seen it's really about that practicing of how I identify, how I analyze, how I extract the information, all right, out of the scenario. How do I amplify my comprehension? How do I pick up on these nuances that will make me actually write a wrong figure because I didn't see that they told me FWH and not AC, or AC and not FWH, etc. Does that answer that question, Swanello?
Yes, it does. Yes, it does. Thank you very much.
This
I just want to,
Linda, yeah, Olivia.
no, I just wanted to add it to Janelle. So if you did do the workshop, the one question that he said, and then you maybe when you do and go do it, and then you see where you miss some knowledge, then you can just, because math have the that, what is this? The reflection videos, then you can just quickly go there. And remember, on the reflection videos, they have the subheadings where you can go click which parts you had some issues with. So that will also help.
Okay. Okay.
Yeah, I think for math, also the reflection videos specifically for those at Mopark, they are good enough, right, for the content that you didn't cover, Tuanello, all right. Rather skip to the reflection video and spend the hour on that reflection video, and pick up your notes from there and your comments from there to be able to then put you in a position to go to the paper.
Okay. Okay. I'll try that.
Okay, Linda, you want to say something, or was it Lesedi?
It was Linda.
Linda?
I was about to ask if we should do PQs in those 7 days, and then you covered it, because usually I'm stuck doing PQs and papers at that time. So I think that's something I've been doing wrong.
Again, I mean, if you've got the time for it, by all means, all right. If you really want to do that, but
There's never time.
we don't have the time, all right. So you want to get the best bang for your buck, and really the PQs are they're very specific to the topic, right? So
Yeah.
they don't bring integration into it and other things into it, all right? So that's the reason why I'm cautious in the last 6 or 7 days, all right, to kind of bed down conceptual foundational knowledge through a PQ that is really going to mess up with exam technique.
Okay.
Awesome. Can I ask you to all put your videos on, your cameras on? I wanna take a screenshot, if possible. Ah, this is so awesome. I should have asked you long ago to put your cameras on. Oh man, this is awesome. Come
Cool
on,
video.
Kashmika. There we go. Lesedi, come on, Gideon. The men in the house don't want to do it. Usually it's the females that say, my hair, or this, or whatever, or I'm not good, looking good, or those kind of things. Cool, smile for the camera, gotcha. Let me just grab it. I'll share it. Let me share it actually right now in the chat, and then you can have it. Maybe some of you will say, no, let's do it again, please. I wasn't ready. All right. Guys, it was awesome. Really, I was telling Bongani earlier, because Bongani and I work together. And so he's also sitting in the office somewhere down in the building somewhere. And I was telling him, I'm enjoying it. I really loved it. I've enjoyed it. And I really want to thank you for actually for having the confidence in me. I think all of you on this call, all right, don't know me. Well, you've met me really for the first time. All right. Even Bongani, he knows me from the office, but really it's the first time that he's, sitting in a session like this with me. So for you to actually uh, you know
There you gone.
Where's David?
sorry about that. Sorry about that. Sorry about that. That was my fault. Yeah, so for you to pay your money and you're not even sure whether you're going to get the value out of this, all right, or not. And then besides the money, spending 8 to 5 yesterday and then coming on for another 4.5 hours today, all right, it's a lot of time. Forget the money, just the time. And for a PGDA student, for a BCDA student, for a CTA student, all right, time is a valuable resource. So for me, from the bottom of my heart, I want to thank you guys for putting that trust in me, and I hope that actually your investment paid off, and that your return your return on your capital invested exceeds your weighted average cost of capital. So yeah, so thank you. I really,
We're
really,
going to
really.
calculate the work, yeah?
All right. So, in the same tradition from yesterday, maybe let's go around the room. Linda, you on the top. Maybe you just want to uh, close up and say, are you feeling a little bit confident? Are you not? I don't want to limit you. You can just say whatever as a closing statement.
Why me first?
Well,
I
you're
was
right next to me on
typing.
my screen.
I was typing on the chat to say thank you so much. It was definitely helpful. It wasn't a waste of time. And I hope I mitigated all my risks this weekend because, yeah, there was a lot I learned. And now I just buckle up and I do the application of what I learned. So thank you so much, David. Thank you so much, everyone. Until next time.
I like that it is the next time. Tanya?
I must say, it was very helpful. I can see where I make mistakes. I don't need to be afraid of answering the question. I see I don't read the questions correctly. Keywords is very important, and just getting that framework for answering the question is very good. Yeah, my confidence is definitely back, and my love for math.
I love. Freedom?
I wouldn't say love for math is back. It's gonna take more. It's gonna take more than one session to get the love back. I think some good marks will push it back in my heart. But yeah, no, thank you, David. I really appreciate it. I think something you outlined was like, I have the knowledge, I know what I'm doing. I just don't know when to do what I know what to do. So I appreciate you, and it was lovely meeting everyone. And let's go get that bread.
Yep, 100%. Olivia?
I think I already spoke. I just want to say thank you. The frameworks will help, and yes, like I said, like I mentioned yesterday, I do learn much more, especially with all you guys' questions and the way you think. So I feed on that basically, and I must say you all have amazing voices, and to put faces to those voices was great. Also now, yeah, thank you very much to everyone.
Yeah, I agree with you. I think everybody's engagement and input and questions really, really helps to actually put this whole thing together. So your contribution really made this session, I think, a success. Tonello?
For me,
I'm very shy, very reserved. I barely ask questions. So being put on the spot and having to answer kind of helped me because now I was able to ask for help on things that I needed clarity on. So this was really very, very insightful for me.
Awesome. Thank you very much for that. Bongani, my colleague.
Thank you, David. I'd like to say I'm really excited to be part of the group because I think from the beginning of this year, I've never been in any group. Yeah, I mean, the other thing is being in a group, it makes you active. Like, it's not like when you're an individual and you're sitting alone there, if you feel like lazing around, it gave me that push, and as a result of that, I think it has also boosted my enthusiasm towards Mac. I feel more like when they say you can kill it or you can kill. Now I feel like, yes, I can do it. There's a lot of concepts which I was struggling to figure out on my own, even if I go to the question. But I found out that being in a group, actually, with one person asking the question and the other one answering, it helps a lot because I think from here, without even like, if I didn't come to the class, I think I was going to be going back to try and understand certain concepts. But because of this session, I don't need to go back anymore. I can face the question right away without even going to revise anymore. So yeah, thanks a lot. Thanks to everyone. Thanks to the team.
Awesome. Thank you very much, Bongani. Ntabiseng actually only joined late in this afternoon session, so it'd be good to hear from you. I know you just joined as call it the late entrant. But what are your thoughts?
So basically, it was just an hour for me. I don't have much to contribute towards this discussion. I'm hoping I can get access because I hear positive reviews from everyone else. I hope I can get access to their videos because Meg is really a struggle for me.
Okay, that's
And
and
it's
I think
the
that's
reason I'm
yeah.
still doing CTA anyway.
Oh, okay.
Yeah.
Now I'm saying we can we can rekindle your love for Mac. Right.
I hope
Let
so. Thanks.
Kishmika, I think I do. You still have? Do you still have a problem with your mic? I think yeah. Okay, yeah, I remember that. All right. So Kishmika saying I'm feeling much more confident with the rest of my tests. This was definitely worth it. I'm glad to be loving Mac again. I share the same sentiment as in it was great to be part of the class. The just journey doesn't feel so lonely anymore. I hope we get to have another bootcamp for test 4. Lovely to meet you all and all the best for test 3. So sorry that I had to type my mic is an issue. That's fine. We appreciate that. Let's say
I have to say that I went back to because you had a bullet point of what this bootcamp was going to be about, and it was interesting to see me. I was ticking off things as you were doing them, so that was really good because obviously I'm making sure I'm getting my ROI, and I must say, having or seeing how you first explained it was very important because then by the time you kept reiterating that the importance of spending time on theory is going to be beneficial later, and you were not lying. And I think that's where the magic is because however the question is, you need to take a step back and not just jump in for the calculations, which is what we all do, and then end up not understanding what is required, or when it's different because we've come the formula, we become a mess. So I have to say that the way that you did it, and the way that you structured this bootcamp was very, very good. And as a result, I would not say it has reignited any love for Mac, but it has definitely made me feel better. Yes, definitely did proper risk management.
So the actual outcome and the expected outcome was close enough. There was no derivative expected.
Yes.
Guys, it was my pleasure, really. It was really my pleasure, and I'll be honest with you. Not the only reason, but one of the big reasons why I started something like this and actually spend a lot of time on this. All right, and I did this over the last 12 months, even during my own PGDA journey, with students that was my peers, was really because I saw that there was an apprehension to math that was not technical. And really, that's why my approach is the way it is, because I was trying to see how do we overcome, all right, this apprehension, this fear, this anxiety, and everything that goes around it, and show you that really it's not as bad as what we maybe have in our mind and what we think it to be, all right. And that's really where my positioning is, and I have no doubt if I can get the marks that I got, and I'm not anywhere as clever as any of you on this call, then I'm sure you can probably get the 90% and the 95%. So thank you again. I don't ask much, all right, but it would be great if you share your feedback, and true, honest feedback. I'm not asking for puns or anything like that. I'm really saying, let's say that you hit the nail on the head there, all right. If I'm saying this is what I'm going to do, all right, and I don't do that, please, I need that feedback. In fact, I shared this with somebody earlier. One of the students, she couldn't join today. There was one girl that actually dropped off yesterday because she said it didn't meet her expectations, and I actually refunded her money. All right. She dropped off at 3 o'clock or so in the afternoon. Right. And I didn't want to have a debate with her because she said it didn't meet her expectations. But like Lesedi said now, I actually went back to that poster. All right. And I actually went to look at that and I'm asking myself, did I do this? Did I do this? Am I doing the right thing? Am I on the right track? Because again, people bought whatever I marketed it as. All right. So that's really, really important to be. So if any of you are on LinkedIn, I'm sure you saw some of my posts on LinkedIn. Just make a comment, share it, tag it, give honest feedback. I'll really, really appreciate that. Have a good evening and a good weekend. I hope to. Oh, maybe as the last thing, I do offer tutor sessions. I have weekly tutor sessions for math. I do help with some other modules as well. Although math is my strong point, as you would have seen, so I try and lean towards that. So if anybody feels that they want to approach me independently, you're more than welcome to reach out to me. All of you got my number. That being said, guys, use me, all right? Send me a WhatsApp message, send me a voice note. I'll be more than welcome to answer your questions and help you along this journey.
Thank you very much.
All right. There is a final comment coming through from Lesedi. You might as well unmute, Lesedi. You're typing so long. Please have another session for
Yes, I was saying that it would be nice to have another session for test 4, if you can, another boot camp, just to have a nice summary for us.
Yeah, so I am having another boot camp on the 12th of July, but it will still be in preparation for test 3. All right, it will still be because especially for the Milpark students, because there's many Milpark students that couldn't make it this weekend, or they thought it was too early. All right. So again, I'm having it on the 12th of July. I think I might structure it mostly the same, but slightly different. Given the experience that we had over this weekend, and see how I can do it a little bit different. So if you want to, there it is again. Of course, there will be some repetition, right? And repetition is not always a bad thing. And then I will have one in August again for the IAS students. So IAS is writing test 3 in August, and then you write test 4, I think, in September, if I'm not mistaken. All right. So yeah, maybe we can arrange something along those lines again. All right. So have a good weekend. All the best. Bongani. Who else is writing on Monday, Tuesday? Nobody on this call. Lesedi, sorry. No, Linda. Lesedi, yes. You're writing on Tuesday. Sorry, Tuesday morning. All right, it's a 40 marker, I believe. All right, so nothing to worry about it. All right, I think you can ace it. Please give me a call, send me a message saying, David, I got it. All right, it will really great. And then I did make this offer to Bongani earlier. I don't know if I made it to the group, but for the yes, I did make it to the group. For you that are that are writing on Monday, please call me tomorrow. Please, ask me for an hour, for a half an hour, for whatever. Let's talk through things. Let's get you in the right space, in the right frame of mind. Please take advantage of it so that we can go onto Tuesday morning confident. This is only for the UNISA students, not for anybody else.
Good luck, guys.
Thank you so much.
All right. Have a good weekend for this last hours of the weekend, and have a great week. All the best.
Thank you very much. Bye.
Thank you. Bye.
Thank you. Bye.